माननीय वित्त मंत्री श्रीमती निर्मला सीतारमन जी।
We are inspired by three kartavya. Our first kartavya is to accelerate and sustain economic growth. Our second kartavya is to fulfill aspirations of our people and build their capacity, making them strong partners in India's path to prosperity. Our third kartavya, aligned with our vision of Sabka Saath, Sabka Vikas.
Item number 1.
Good evening and thanks for joining CNBC-TV18's special broadcast on Budget Day. I am Archana Solanki. Here are the headlines we're tracking. Finance Minister Nirmala Sitharaman's ninth budget keeps an eye on the fiscal deficit glide path, even as it focuses on driving growth by increasing exports and attracting stable long-term investments. Promises to sustain the momentum of structural reforms, strengthen the financial sector and support building cutting-edge technology at home. In a surprise move, the Finance Minister proposes hiking securities transaction taxes on equity futures and options contracts. STT on futures is to be hiked by 150% and by 50% on options. The move rattles the stock market. Sensex and Nifty reverse early gains to post the biggest budget day decline in 6 years. Finance Minister projects a nominal GDP to grow at 10% in the next fiscal, hikes capital expenditure outlay by 9% to 12.2 lakh crore rupees. Documents show the government missed last year's target by 3%. Finance Minister looks to spend more to shore up India's defence capabilities. Budget proposes hiking defence capex outlay by 21% to 5.9 lakh crore rupees. The budget for defence modernisation is up 24%. Government sticks to the path of fiscal consolidation. Fiscal deficit target for this fiscal projected at 4.4%. FY27 target stands at 4.3%. The debt to GDP ratio projected to decline from 56.1% to 55.6%. A sharp hike in government borrowing. Budget projects gross borrowing of 17.2 lakh crore rupees. This is 18% higher the current fiscal year's estimate of 14.6 lakh crores. Government projects net tax collections at 28.6 lakh crore rupees. This is slightly lower than the budget estimates last year. Collections in FY26 missed the budget estimate by 1.6 lakh crore rupees. Government accepts the recommendation of the 16th Finance Commission. States will continue to get a 41% share of overall tax revenues. As expected, there are no changes to personal income tax, but the budget proposes measures to ease compliance and cut down on litigation, like more time to revise tax returns without penalties. Also proposes lowering tax collected at source on foreign travel to a flat 2%, TCS on money sent abroad for education or medical expenses to be also cut to 2%. The Finance Minister moves to further curtail any improper use of buybacks, proposes to tax buyback for all types of shareholders as capital gains, also proposes introducing an additional buyback tax on promoters to disincentivize the misuse of tax arbitrage. Says the tax will make the effective tax rate 22% for corporate promoters and 30% for non-corporate promoters. All right, a modest capex hike, more firepower for India's defence arsenal and a tax shocker for the stock markets. Finance Minister Nirmala Sitharaman's ninth consecutive budget is aimed at providing a thrust to manufacturing and offset the impact of the 50% US tariffs. Let's quickly take you through the top highlights. First, the stock markets were rattled after the Finance Minister proposed hiking securities transaction taxes on equity futures and options contracts. The market saw its biggest budget day fall in 6 years. The Finance Minister also added more firepower to India's defence arsenal. Defence allocation has been hiked by 21% to 5.9 lakh crores. Overall capex saw a modest growth of 9%. As expected, there are no changes to personal income tax, but the budget proposed measures to ease compliance and cut down on litigation, like more time to revise tax returns without penalties. Here are the key snippets of the Finance Minister's 85-minute long budget speech.
I propose to raise the STT on futures to 0.05% from the present 0.02%. STT on options premium and exercise of options are both proposed to be raised to 0.15% from the present rate of 0.1% and 0.125% respectively. I propose interventions in 6 areas. 1. Scaling up manufacturing in 7 strategic and frontier sectors. 2. Rejuvenating legacy industrial sectors. 3. Creating champion MSMEs. 4. Delivering a powerful push for infrastructure. 5. Ensuring long-term security and stability. And 6. Developing city economic regions.
ये बजट भारत की वैश्विक भूमिका को नए सिरे से सशक्त करता है। भारत के 140 करोड़ नागरिक फास्टेस्ट ग्रोइंग इकोनॉमी बनकर ही संतुष्ट नहीं है। हम जल्द से जल्द दुनिया की तीसरी सबसे बड़ी अर्थव्यवस्था बनना चाहते हैं।
Well, the budget also announced a slew of tax changes. Sonal Bhutra is here with more.
Basically, if you're going abroad to study for medical purposes or for leisure travel, you will have to deduct less TCS on the amount that you're paying there. It has been reduced from 5 to 2% for education and medical purposes, and reduced from 5 and 20% to 2% if you are taking a group package for traveling abroad. Of course, this amount can be set off while you're filing your return, but it created liquidity issues for investors or individuals, and that is something which seems to be getting solved by this particular change. On sovereign gold bonds, now remember, after the rally that we saw in gold, a lot of people were buying sovereign gold bonds in secondary market. There is a clarification which has come in that from April 2026, the gains on this will not be exempt from capital gains tax. Only people who have bought it from the primary market from the start to the end will not have to pay capital gains tax, but if you bought it from the secondary market, there will be no exemption that will be available. Now, the fifth one is that if you are paying interest, basically borrowing money to buy mutual funds, this interest that you pay will not be allowed as a deduction from any of the dividends that you are earning from mutual funds. So this provision is done away with. There are a lot of relaxations in terms of compliances as well for return filing. Let's now talk about the 6-month foreign asset disclosure scheme for 2 categories. First is those who have not disclosed the foreign income or assets, and those who have actually disclosed it, but they have not declared the asset which was acquired. So there are some provisions for that as well. Now let's talk about the corporate taxes, because there are changes in safe harbor rules, because this was a long ask from the industry as well. The threshold for availing safe harbor rules for the IT industry has been increased from 300 crore rupees to 2,000 crore rupees. So that's a positive which has come by. There are some exemptions on data centers as well. There is also exemption for income for a period of 5 years to any non-resident who is providing capital goods, equipment or tooling in a bonded zone. So basically the Make in India factor is working in case of a lot of tax exemptions which have been provided to some of these industries. The last one is now MAT, the minimum alternate tax is proposed to be made final tax. No further credit accumulation from 1st April of 2026, and the rate has been reduced from 15% to 14%. They've brought forward MAT credit that is available in your books as on 31st March 2026 will be available to set it off against any other liabilities that you have. But these are some of the major changes which have been announced in the budget this time around.
Right, thank you Sonal for that. Shifting focus now, the budget also announced an initiative aimed at positioning India as a global biopharma hub with a proposed outlay of 10,000 crore rupees over 5 years. The Finance Minister also announced a slew of measures to boost medical tourism. Ekta Batra is standing by with the details. Ekta.
Well, yes, I'll start with, Biopharma Shakti, which was announced. So it's around a 10,000 crore biopharma scheme which was launched, which is aimed to make India a biopharma hub, build domestic biologics manufacturing. So there are 3 new NIPER institutes which are planned, 7 existing NIPER institutes which will be upgraded, and 1,000 plus accredited clinical trial sites which are proposed as well. It is a sentiment positive for the sector. Biocon, Dr. Reddy, Sun Pharma, Lupin, Glenmark, just to name a few. In terms of hospitals and diagnostics, medical tourism push, so 5 regional medical hubs are planned. It will be a public-private partnership model. Integrated healthcare complexes are proposed as well. Listed beneficiaries include the likes of Apollo, Fortis, Max Healthcare, Dr. Lal's, Metropolis, all of these stocks in focus. But remember, while this is a positive, the execution will be something that the street will be watching for in terms of all of these announcements and the material impact eventually on the earnings as well.
All right, thank you, Ekta. Now, the budget also proposed hiking defence capex outlay by 21% to 5.9 lakh crore rupees. Ria Bhatia has more. Ria.
Well, yes, the government this time around has announced a total defence budget of 7.85 lakh crores. Now, compare this to last year's budget of 6.81 lakh crores. It's an increase of roughly 15%. So, the expectations on this front range from 10 to 15%. So, this is at the top end of the expectations. The defence expenditure has been announced at 5.95 lakh crore rupees for the year, up 21% compared to last year's budget. Defence capital allocation has also been announced at 2.31 lakh crores versus 1.92 lakh crores in FY26, and this is also an increase of roughly 20% compared to last year, also in line with the expectations that the street was working with. There has also been a 24% increase in the budget for defence modernisation, which is a bit positive. Apart from this, they have also allocated roughly rupees 63,734 crores for aircraft and aero engines for defence, which is a 31% increase compared to last year's outlay. Now, in terms of the market reaction, the Nifty Defence Index ended roughly 5.4% lower today, recovering from its lows of 7 to 8%. And in fact, at one point of the trading session earlier before the budget was announced, it was up by roughly 2% earlier in the session. Now, the street seems to be disappointed by the fact that there were no separate announcements or schemes that were announced for certain segments like drones, UAVs, electronic warfare, defense electronics, missiles, even for arms and ammunition or for indigenization as a whole. So that is where the street seems to be disappointed. But overall, this was a very healthy increase in the capital allocation as well as for the overall defense budget.
ऑपरेशन सिंदूर की ऐतिहासिक सफलता के बाद आए इस बजट ने देश की रक्षा व्यवस्था को और मजबूत बनाने की हमारे संकल्प को सुदृढ़ किया है। यह आवंटन पिछले वर्ष की तुलना में 15% से भी अधिक है, यानी इस बार भी केंद्रीय बजट का सबसे बड़ा हिस्सा रक्षा मंत्रालय को मिला है।
All right, so what did the budget have for the startup ecosystem? My colleague Shruti is joining us on the broadcast. Shruti, over to you.
Well, thanks for that. Budget 2026 sends a clear signal to India's startup ecosystem. This is no longer just about creating startups, it's about helping them scale. Here are the key takeaways. First, deep tech and manufacturing. The launch of India Semiconductor Mission 2.0 is a major push for hardware, chip design and advanced manufacturing startups. The focus is on building full-stack domestic capabilities, from equipment and materials to design and supply chains. This is backed by a 40,000 crore rupee allocation for electronic components aimed at easing supply bottlenecks. Alongside this, the development of critical mineral and rare earth value chains brings deep tech startups in electronics, EVs, defense, and clean energy into focus. Second takeaway is growth capital for MSMEs and scaling startups. The government has announced a 10,000 crore rupee SME growth fund, along with a 2,000 crore rupee top-up to the Self-Reliant India Fund. The emphasis is on patient capital to help small businesses and startups scale. Liquidity support through mechanisms like TREDS and credit guarantees is expected to ease cash flow pressures. Third, easing operational friction. Budget 2026 addresses a key pain point with the rollout of corporate mitras in Tier 2 and Tier 3 cities, aimed at providing affordable compliance and professional support, helping startups scale beyond metros. Fourth is women-led entrepreneurship. The proposal to set up self-help entrepreneurs or she-marts is a significant step. These community-owned retail outlets are designed to help women move from credit-linked livelihoods to enterprise ownership. And finally, AI and innovation. Fresh allocations for AI capacity, building missions, and the operationalization of the Anusandhan National Research Fund underline a push towards indigenous research, workforce readiness, and long-term innovation, critical enablers for India's startup ecosystem. Overall, Budget 2026 lays out a clear framework, capital support, manufacturing depth, and technology capability. The real test now will be execution. Back to you.
Right, thank you, Shruti, for that. The budget also saw a slew of initiatives to boost the textile and seafood industries. So, will these measures help offset the impact of America's tariffs? Shilpa Ranipeta has more. Shilpa.
Well, that's the hope. But let's look at what the announcements were. Now, the government has announced a series of relief measures for India's textile, leather and seafood industries. All labor-intensive sectors, all currently under pressure due to high US tariffs and weak global demand. Now, starting with seafood. Now, seafood, the duty-free import limit for inputs used in seafood processing, that's been raised from 1% to 3% of last year's export value. This means that exporters can now import more essential materials without paying customs duty, helping them cut costs. Now, in another big move, fish caught by Indian vessels in India's EEZ and on high seas will now be duty-free. And if that fish is landed at a foreign port, that will be treated as an export, allowing fishermen and companies to legally sell abroad and access export benefits. Now, the government also says that safeguards will be put in place to prevent misuse of this. Next, leather and footwear exporters. Now, the duty-free import benefit, earlier available only for full footwear exports, has now also been extended to the shoe upper exports. That's the upper layer of the shoe as well. And this lowers costs for a key segment of the supply chain. Also, exporters of leather goods, garments and footwear will now get 1 full year to ship their products, up from earlier 6-month deadline, and that gives them more breathing room as orders slow down amid delays because of the entire tariff situation. Now, on the textile front, the government has announced an integrated push. This includes new schemes covering fiber, self-reliance, cluster modernization, job creation, handlooms and handicrafts, sustainable textiles, and a lot more, including mega textile parks and a new initiative that aims to strengthen khadi, handloom, and village industries. Now, with a focus on branded training and global market access is also there. Now, why this support now? Because US tariff shock has been hitting these sectors hard. The US accounts for nearly 30% of India's apparel and textile exports, and these after a 50% tariff, have been in a difficult place, especially places like Tirupur. They have been warning of factory shutdowns as shipments to the US have fallen by over 50% in Q3. CRISIL, in fact, has also said that it expects the US tariffs to result in India's leather industry's revenue falling by about 10 to 12% in FY26. And in the seafood industry, US makes up about 35% of exports, and shipments have already fallen 25%, with new orders in the future completely drying up. In short, the government is trying to ease costs, extend timelines, and protect jobs as export-heavy sectors navigate one of their toughest global trade environments in years. Back to you.
Right, thank you, Shilpa. Now, Budget 2026 has also proposed a 20-year tax holiday to any foreign company that provides cloud services using data centers in India. Rachna Dhanrajani is here with the details. The government giving tax incentives. Rachna, over to you.
That's right. Budget 2026 puts data centers firmly in focus with clear tax incentives aimed at pulling global cloud companies into India. The Finance Minister has announced a tax holiday till 2047 for foreign companies offering global cloud services from data centers located in India. Any services sold to Indian businesses, however, will be routed through an Indian reseller and they will be taxed locally. But to reduce tax uncertainty, the government has fixed a 15% safe harbor margin for related party data center services. This is a move aimed at cutting long-running transfer pricing disputes for global cloud firms. But there's also a supply chain push. Non-residents warehousing electronic components in bonded warehouses will be taxed on a 2% profit margin, translating into an effective tax of about 0.7%. So who benefits globally? Well, large cloud providers running global workloads from India stand to gain definitely. This includes Amazon Web Services, Microsoft Azure, and Google Cloud. Now, global electronics manufacturers using bonded warehousing in India also benefit, as do the multinational tech firms looking for long-term tax certainty till 2047. On the Indian side, however, several companies are positioned as key partners given that they have a joint venture. First up is Adani Enterprises, who's in a joint venture with Edge Connex under Adani Connex. There's Reliance Industries, who's building large hyperscale data centers, campuses in partnership with Brookfield and Digital Realty. Then there's Bharti Airtel. Through Nextra Data, this works with global cloud and enterprise clients. Then there's also Tata Communications that's providing data centers and cloud infrastructure to global enterprises while being located in India. And then there's ST Telemedia Global Data Centers that runs a large India presence and is backed by the parent company that also has ownership from KKR. So put together, these measures show how the budget is using tax certainty, lower logistics costs and clear rules to position India as a base for global cloud and data center operations. Back to you.
Right. Thank you, Rachna, for that. Commerce Minister Piyush Goyal is in conversation with Parikshit Luthra. Let's cut across.
Safeguarding Indian exports amid global uncertainties was a key theme of the Union Budget 2026. Joining us right now is Union Commerce Minister Piyush Goyal. Minister Goyal, thank you very much for joining us. You're just emerging from successfully concluding talks with the European Union. How does the FTA push that we see from the Commerce Ministry and now the Union Budget complement each other in supporting India's export story?
Well, I think this is a fabulous budget. It's a budget which reflects a future-ready Bharat. It takes forward Honorable Prime Minister's Reform Express full stream ahead, covers a very wide span of businesses and sections of society, women, youth, MSMEs, the manufacturing sector, equally the services sector. Technology has been given a big thrust. We see education and skilling getting a focused attention. So much so that a new National Institute of Design has also been proposed to be set up. Inland waterways being expanded, 7 high-speed rail corridors coming up, 12,20,000 crores being invested in infrastructure. And the speed at which we are developing infrastructure has become a surprise for the entire world today. If one looks carefully at this budget, it's very holistic, very forward-looking, preparing 140 crore Indians to speed up our journey towards Viksit Bharat.
Let me ask you about one major measure that has been taken by the Commerce Ministry, and that is for SEZs, one-time relief for manufacturing units in SEZs to sell a limited portion of their output in domestic markets at concessional rates. This was important because of the strain on manufacturers right now. Could you give us the contours of this scheme?
Broadly, the idea is that existing units in SEZs are today required to pay duty as if the goods are being imported into India if they supply to the domestic market. Many of them have surplus capacities and the same goods are being imported duty-free from other geographies. The idea is that these existing units can use their surplus capacity and some proportion of their production, obviously less than what they are exporting, may be allowed to be sold in the domestic market in such manner that it doesn't hurt other domestic manufacturers. So we equalize or make a common level playing field for both by reducing the duty burden on the SEZ unit, but reduce it to such an extent that they are at the same level as other domestic manufacturers.
So what will be the duty level? What sectors
will
it will
depend on sector to sector. There would be some sectors where we may not give this benefit, things like refining crude, petrol and diesel. Probably there it may not be proper to allow this. It may be to a big disadvantage to the other refiners. So it will have to be seen sectorally, and we will have to calibrate the approach so that SEZs also benefit, SEZ units get an opportunity to serve Indian needs, and we save foreign exchange.
Right. There's been a lot of focus also on labor-intensive exports from India, textiles, leather, footwear, especially rationalizing customs duty on the import costs. give us a sense of the targeted measures that you've taken and the kind of sectors you want to support with the budget.
Well, if you look at the budget, it is looking at labor-intensive sectors, it is looking at technology-intensive sectors, it is looking at traditional sectors, it is looking at futuristic sectors. I mean, the expanse is phenomenal. Textiles. It adds new textile parks, mega parks. At the same time, the thrust is on man-made textiles, because 2/3 of global trade today is on man-made textiles. It gives a thrust to the leather industry and sports goods and sportswear and sports shoes. Idea being that there's a large market out there which we can service very well, because we have low labor costs. Marine fishing, it opens up avenues in the EEZ so that we can expand our marine exports also. It will also help us provide nutritious foodstuff for our domestic consumption. Animal husbandry and poultry has also been given a thrust. So wherever there is farmer or animal husbandry or fishery involved, we continue to support them to increase their incomes. All labor-oriented sectors, and for that matter, infrastructure also is a highly labor-intensive sector, are being given a thrust. Look at the data centers. Duty tax-free until 2047, 22 years from now. Can you imagine the huge thrust that this will give foreign companies who wish to invest in India to set up data centers and provide cloud services internationally? And look at the benefits for India. We get the material, we get investment into India. We sell material for construction, provide jobs to people to set up these data centers in terms of the infrastructure required. It needs tons and lots of power and lots of power redundancy. So it will promote investment in energy sector. By and large, these data centers prefer renewable energy. So it will give a thrust for nuclear energy, for green hydrogen, green ammonia. It will give a thrust for solar, hydro, battery storage, pump storage. It opens up avenues in a very holistic way, all of which lead to jobs, all of it lead to investment, all of it lead to economic activity, taxes. So the budget, I find, is an economically and fundamentally very strong budget, which gives an impetus to our growth story.
Are there certain sectors which are going to get more relief in the coming days, maybe leather for that matter?
We are looking at a scheme which may help to promote the leather industry in a big way, and are trying to draw up the contours of that.
On services exports, there was a substantial amount of time spent by the Finance Minister on boosting the services industry, including the IT industry. How does this safeguard the interests of our services sector, services exports?
We have tried to simplify processes and improvise on the safe harbor rules on most of the services, also clubbing all the IT-related services into one. There's a committee going to be set up to look at the services sector holistically, because we find that's an area of strength of our country. It's an area where we are growing already very rapidly, and we see tremendous potential to increase our share in global trade and services to at least 10% of the global trade. And by the way, that is a big amount. Just the European Union alone, with which we've opened up 144 services subsectors through the free trade agreement, imports 2.7 or 2.8 trillion worth of services every year. Currently, we export only 46 billion. If we can target at 10% over there, we're looking at nearly a $270 to $300 billion services export to European Union. That's the potential. So I think this is a budget which meets the aspirations of New India, which meets the aspirations of Young India, which provides wings to the dreams of New India.
Speaking about the FTA with the European Union, give us a sense of how this is going to safeguard our export growth story and what kind of growth numbers do you expect once this FTA comes into effect, and possibly even a timeline if you could share with us? Your colleague, your counterpart, Maros Sefcovic, said hopefully early next year.
Probably even earlier. Subsequent to that, we've had discussions at the highest level. We are looking at speeding up the legal scrub. We are looking at using artificial intelligence to get us the first cut of the 24 languages it needs to be translated into. And then, of course, the human beings can look at it. We are looking at the European Parliament fast-tracking approval, particularly since this is one agreement where no sensitive sector has been touched. So unlike the other agreement, Mercosur agreement, which from 19 to 26 took 6 years to approve, in this sector, all the 27 member states have welcomed it and are actually requesting that this should be fast-tracked. The German Chancellor yesterday said that this agreement, the India FTA, should be fast-tracked and implemented at the earliest.
So how much do you expect it to add to our growth story?
Our guess estimate or first cut estimate, both on the European side and Indian side, reflects that we should be able to double our bilateral trade in the next 5 to 6 years after it comes into effect.
What about the situation with the United States? Are there certain differences right now in trade talks? Have some new issues come up? Any sense on the timeline?
You heard the Honorable President of the United States of America this morning aboard Air Force One. And I think we are making good progress and working in the spirit of friendship.
Right. Just a word on what Jamieson Greer had to say. Just last year, he had said that India has given the best possible deal ever. Now, in his latest remarks, he said that India needs to do more when it comes to reducing Russian oil purchase. I can assure you we are in regular touch. My good friend Jamieson and I, we've known each other since Trump won. And I have absolutely no doubt that between him and me, or between both our teams, the synergy is very good. The understanding is very positive, and we'll be able to finalize very quickly. So would it be a matter of a few weeks or months?
That we will have to wait and see. You know, we never do any trade deal with deadlines.
To what extent have you tried to address global uncertainties, the trade volatility with the US in the budget to safeguard India's interests?
I think this is a budget for the next 25 years. This is a budget for the future of India. It's a budget which prepares India to take rapid strides towards Viksit Bharat 2047. So I don't think the budget is ever formulated based on just a particular situation or a particular uncertainty. Budgets are always made for a long-term vision of the country.
Right. On quality control orders, you've done a lot in terms of eliminating QCOs. The survey said that more can be done. Are we looking at a greater review of QCOs?
It'll be a calibrated approach. If we find that the QCO can be deferred or might be even eliminated, and that it is, we already are producing good quality production in India, and even the imports into India are of good quality. We are not getting substandard goods. We will always be open to amending or even eliminating QCOs. Right. We are a listening government. This government is open to inputs and open to ideas. At the same time, we have to make sure that vested interests may not try to once again bring in substandard quality production in India. As you're aware, the Honorable Prime Minister has focused very strongly on quality since 2014, when he introduced the concept of zero effect, zero defect, Z. He spoke about it in his Mann Ki Baat last Sunday. He spoke about it on the first day of Parliament. He spoke about it today when reflecting on the budget. So I think this is very dear to the Honorable Prime Minister. It's very important when India plans to become a developed nation to also focus on quality in a big way.
Right. What is the message that you'd like to send out to global investors with the budget, sir? FI outflows have been a concern. It's been about $23 billion. The drop in FDI has been questioned by experts as well. So what do you think is the message that India is trying to send out with this budget to both domestic investors and global investors?
Well, I think being the fastest growing large economy with fiscal prudence at the core of our thinking. You can continue to see fiscal consolidation in this budget also. With the fact that massive investments are going into infrastructure and new opportunities are being created for investments in manufacturing and promoting services, we have set the roadmap for the next 2 decades, powering the economy on towards Viksit Bharat, a developed and prosperous India by 2047. I think those who will miss the bus today will regret it.
Any rethink on the press note 3 on China?
We have been receiving requests from many quarters that there could be a de minimis so that the larger funds, which may have a very small element of some 1 or 2 Chinese investors having 1 or 2, 5% Chinese investment in a larger pooled capital or a fund, may be considered for exemption, because that's not really an opportunistic takeover that could be planned. It's just a financial investment which comes in through the form of funds. It is certainly something which has been brought to our notice and is under consideration.
Minister Goyal, thank you very much for joining us to give us the sum and substance of the union budget and the message it sends out to our exporters and the global investor community. Thank you so much.
Parikshit.
Thank you. So I'll just do a quick Hindi one.
All right, thank you, Parikshit, for that conversation with the Commerce Minister. On that note, what we'll do is we'll take a short break, but don't go away. News and updates continue right here on CNBC-TV18.